Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the Daily FX Walkthrough. Going to get started in just a moment. What I'm going to do tonight, as always, is walk through the latest technical report by Jamie Setley at DailyFX.com. So let's go ahead and pull up that report if you give me one moment here. And we can read the synopsis on top. Euro and Swiss franc rally is considered extreme. Euro hits 200-day SMA. British pound vulnerable to weakness below 152.39. CAD, Aussie, and Kiwi hit resistance. So let's scroll down and read a little more about the euro dollar. And both the euro dollar and the pound dollar, I definitely suggest reading through these two synopses by Jamie tonight. The article is located directly above this video, and it speaks about the historic month in the euro dollar, as well as a warning, a very timely warning in the pound dollar for a substantial drop that did in fact occur after Jamie's report. So it's very important to keep an eye on Jamie's reports each and every day. I'm going to go ahead and pull up the charts, but I certainly recommend skimming through his report, particularly the sections about the euro dollar and the pound dollar. So let's go ahead and pull up the charts. The first chart is, let me go in order here, would be the euro dollar, as I was mentioning yesterday, and with all the short U.S. dollar trades, we should try and lighten up our positions, maybe hold one mini lot, and we could see here the euro dollar, and I'm using that 61.8 for the entire down move from just above that 160 figure down to below 125, and we could see prices peak their head above that 61.8, and then there was a reversal to the downside. So what I would suggest now, and this would be a slightly longer term trade, I would exit all the long positions and then maybe look to get short near that 145 figure or near the 146 figure. Again, this is a longer term trade on the daily chart, so your stops will be a little wider. I don't like, obviously, the long wick that was left behind on the daily candle there, but I mean, I like it in terms of the 61.8. It's showing that the 61.8 level is acting as resistance. I don't like it in terms of continuing to be long the currency pair, but it would suggest a short trade could set up within the next day or so near that 145 or 146 figure. So keep an eye on those levels. The next chart is the Kiwi dollar. Same thing here. I'd definitely recommend lightening up on the long positions. We had that breakout above the 56 area, and same thing here. This is again that short dollar trade, and now we are due, and it seems like the start of a correction has occurred. So the next chart would be the Aussie dollar, and this is the trade that I was speaking about yesterday. And this is and I'm sorry if nobody agrees with me, but I love losses, and you have to embrace your losses. And if you entered this trade with the close above that 70 figure, as I was mentioning yesterday, we might look to enter around 70.20, 70.30 area with a stop around 69.50. You would have been stopped out, but there is absolutely nothing wrong with that. As I said many times on these reports, you have to learn how to lose. It's the most important part of trading, and in this case, we might have entered and had a 70 pip loss on the trade. But if that is what happened to you at home, pat yourself on the back. You're on your way to being a successful trader, and that's only further demonstrated by your ability to enter trades and to take your losses when the market moves against what you think is going to happen. And at this point, I wanted to go back to the pound dollar here, and this is the support line that we entered on early this week. And we could see, as Jamie was mentioning in his report, when prices were near that 153 figure, he was mentioning that there was a chance for a substantial drop, and that's exactly what did occur. And as I was mentioning in my reports, how we should lighten up on the positions. And this is a good example. Let's say that you had a larger position that you established right at that support line. As I mentioned, maybe taking profits at the 154 area and also near the 156 figure, and maybe holding a small position moving forward in case the rally were to continue. So let's say that happened, and then prices came down, and maybe you exited on the close back beneath that support level. You still would have had a profitable trade on that one remaining lot, assuming you did enter near that 149.50 area. So this goes back to what I was speaking about yesterday. getting a good price, and this is what a good price allows you to do, particularly on an upward sloping support line. A good price here allows you, even you're stopped out on a for a clear technical reason, and you still held on to some of your profits in the trade. Not to mention, a bulk of the position which you exited at extremely more favorable prices. And one thing also that I wanted to mention on the pound, if I can draw a support line here, this is something maybe we can look at moving forward, assuming you want to continue to be short the U.S. dollar. It appears as though the pair did bounce off the lower support line here, and an even longer-term support line than this initial support line that we did use for entry. So that's something to look for moving forward. These are the support levels that I would be using. It's really, I can't really say that I would hold a bullish bias against this support line moving forward, but it could be a gauge in terms of if there's a breakout to the downside. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.